Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 30th, 2010. Now our first position for tonight, we're going to be looking at the orange juice futures. Now we can see that we have the triple EMA crossover here, getting ready to make a move to the upside. We've got our predicted medium and long-term differences, both in positive territory, and on our predicted true strength indicator, we're sitting just above the zero line, and we have a cross on that trigger, so that looks very good. Everything lining up here very nicely for the orange juice futures to continue to move higher. Now we've closed the week at we've closed the day, excuse me, at 143.50. Our key areas here are 142.94, 142.24, and 141.60. Now that we've clearly identified which way we want to trade this, we're now going to look at the predicted highs and predicted lows for tomorrow. Now again, we're experiencing very volatile markets with everything that's happening, the euro debt crisis, the equity markets selling off. So again, we kind of move off and away from those areas, those high volatility areas, and try and find something that's trending here. Now looking at this, we can see that we've got a nice trending move. We've closed the week, or excuse me, again, we've closed the day 143.50. That's up $1 from yesterday. That's very good. So that's a confirming indicator for myself when I look for things, if it's going to continue to trend like that. So for tomorrow, we're going to be, what we would like to see is a pullback towards this 142.37 area. Our predicted short, medium, and long-term differences are all positive. Neural index is positive. Everything looks good there for the orange juice futures to continue to move higher. Now, again, the orange juice futures has very little correlation to those other commodities, and that's what I like about this trade. So with a predicted low of 142.37, we want to look at the predicted 3, 8, and 18-day moving average. Now we've got 142.94 and 142.24. So stops in this particular case we would have below the 141.60, below that 18-day predicted moving average, and I would anticipate a move back to somewhere between the 144 and 147, 148 area. But again, for tomorrow, we're just going to play that predicted high. Now that's our first position. Now for our second position, we're going to go back into the foreign exchange market. Now again, a lot of volatility in that particular market right now. Now looking at the British pound US dollar, it's held up very well considering the strength in the US dollar, the weakness in the equities, the weakness in the commodities. The British pound has held up quite well. Now let's identify three critical areas here. We've got our 3-day coming in at 150.59, our 8-day coming in at 149.59, and the 18-day predicted moving average, our key level of support, 148.37. It would certainly not shock me if we pulled back somewhere between 149.59 and 148.37. However, this would be a buying opportunity. But for now, we're going to stick with our predicted highs, predicted lows, and our 3 predicted moving averages to identify those areas of pivot support. Our predicted true strength indicator is now moving into overbought territory. Predicted MACD, somewhat overbought, but no crossover on the trigger. Predicted medium and long-term differences, both positive. Everything looks good there. So for tomorrow, what we're going to do is we're going to narrow down the entry using the predicted low of the day, and our stop is going to be below that 18-day predicted moving average, down in the 140.48.20 area. Very important that we stay out of this broker radar and all this intraday volatility. So for tomorrow, we've got 150.10 is the low, 151.49 is the high. Neural index is up. Predicted short, medium, and long-term differences are all positive. Everything looks good there, but they are coming down slightly. We can see that we've moved in the short term from 98 down to 49. That's a little bit of an indicator that we're going to experience a pullback. Question is, how deep is that pullback going to be under the current market conditions? So we want to be very, very cautious of these things. Again, watching the equities very closely, because normally the British pound will follow those equities. If the equities are moving lower, so is the pound. But in this particular case today, that wasn't the case at all. It pulled back towards the predicted low of the day from vantage point, only to basically shoot right out of there back into the 151 area. So right now, 150 area, a lot of people watching this area looking to get into long positions. Vantage point's confirming this right now. Key point is where to put a stop in this. In this particular case, we're widening those stops out to about 150, 160 pips. So it's recommended for smaller positions scattered over a broader range if the 150 gives way. Now, if the 150 gives way, that certainly doesn't mean the uptrend is over. It just means it's in a corrective phase and it's reacting to what's happening in the Eurozone and more specifically what's happening in those equity markets. Now, for tomorrow, we are only going to stick with the 2 recommended trades, but I am going to touch base on a couple of other trades that did quite well today. Our Australia-US was unable to hold based on what was happening in the equity markets. The gold trade still looks good. We got a nice move today, pulled back to our entry point. We can see our low today at 112 or 1227.60, and then it shot up to the high of the day at 1246, and we've closed out at 1242. So for now, the 18-day predicted moving average from Vantage Point at the 1234.70 is still holding. That's a very good indication considering what's happening, because normally when those equities slide, gold will slide with it. So gold's still holding firm there, and I still like longs despite what's happening everywhere else. Now, again, going into our meats contracts, our frozen pork bellies, another good indication on that trade too. When you're experiencing this kind of volatility in the equities, commodities, and currency markets, the frozen pork bellies, again, a very nice trade today. And considering everything that was happening, it did quite well. We've got a pullback of a low of 98.90. We were buying off the, I believe it was the 130 area, and then it pulled back, and then subsequently moved back higher on the close, back up to 101.20. I still really like this frozen pork belly trade for a number of reasons, but that the key reason is that it has virtually no correlation to the crude oil, to the gold, to any of these other things. And it's very, very important when we're experiencing this kind of volatility that we look for trades, future trades, equities, and commodity trades that have low correlation to some of the other things that are happening. So again, I still like these frozen pork bellies. We had a nice move today. I'm going to quickly go into the predicted high and predicted low tomorrow, because it is worthy of another trade in my opinion for sure. Now again, we're just going to have a look at what the range was. We had the range pointed out here, 101.20 to 100. Very nice trade today. Again, we've closed at 101.200, the same as the other day. That still looks good. So for tomorrow, we're looking for a pullback again to probably the 114 area, at which point I'm still recommending longs on this trade. Still like it a lot, particularly compared to some of these other markets right now. So for all you futures traders out there right now, I would still recommend going forward with the frozen pork bellies. Very good trade. So those are the positions for June the 30th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.